we're going to grow our population, right? It brings in so much money to our economy, and we want to grow our economy and standard of living. So if you believe in that, then you got to believe in sort of good quality land in our capital cities, because we can't just build another Brisbane or a Sydney or a Melbourne overnight, right? Like it's that those things take decades and decades, and we're sort of already behind the eighth ball, because we're moving to more knowledge work rather than sort of farmland, I guess.
Yeah, so at one level, I think that the broad trends are actually pretty simple and pretty uncomplicated and pretty incontrovertible, which is why taking advice on don't buy because prices are about to go down generally is, that's not the right. You're asking the wrong question.
Well,
the right question is what property should I buy? A secondary question may be, is today a really bad time to buy this property? Because occasionally you might say it's not the best time. But absent that, if you have good objectives, you're buying for the long term. And again, look, we've analysed after about 7 years, what we call the vintage risk becomes much less significant, right? So different bottles of wine from different vintages are better or worse, and it's the same with property prices in different segments. And so obviously there are some years that it would have been a better year to buy in, broadly speaking, than others. But after 7 years, those effects have mitigated to a significant extent. By 12 years, it's really, there's just not a lot in it. So the important thing again was, did you buy the right property?
I've done some analysis on that as well, and the premium you may have paid on an A-grade asset, an A-grade location, actually that premium doesn't compound. It's a one-off cost, and it sits there, like you say, and the longer you own that property, it just diminishes in percentage. And impact. And
as does your stamps, right? And which is yet another reason why you should be buying for long-term hold wherever possible.
Yeah.
And therefore you've got to buy the right asset.
Exactly. The other thing too is that there's a lot of noise around interest rates and falling prices and all the rest of it, and it's not helped by the fact that the media can't actually, interpret numbers. One is, and I mentioned this in the Fuller Forecaster Report episode, and I was really surprised that Westpac came out with this forecast saying that 14% price falls by 2023 or whatever, and it literally this was released at the end of the last half of 2021. They were saying another 2% rise at the end of 2021 and a fall of I think 5% 2022 and a 7% in 2023. Now, if you add those three numbers up, you get 14%, but it's actually +2, -7, -5. It's 8%. So. The point is that was just repeated as headlines, and people go, 14%. And it's like no one even bothered to interrogate actually what compromised that.
Well,
but
and again,
another one though is the RBA saying that if interest rates rise, then the growth rate will be price growth will be impacted to the tune it will be 15% lower than it would be in 2 years' time if interest rates don't rise. So people go, oh my God, prices are going to fall 15%. No, they're not. What they're saying is that prices won't grow, quite as much as they will if interest rates stay as they are. And it's once again, it's like, stop reading a bloody percentage and the word fall or not price rise or whatever, and then just go, oh my God, it's all going to fall off a cliff. It's actually not. Read the detail, understand it.